Mr. Loo, the end of the world is here. The stock market is crashing and crashing and crashing, crashing. Jialat now, Walao, it's very, very terrible. What am I going to do right now? What am I going to do right now? Well, ladies and gentlemen, for the last, 36 hours or so, I'm getting this kind of remark with me. And I think it's important for me to paint to you the story why things are happening, what I think will happen, and most importantly, what I've been doing. So let's watch on, shall we? The most important thing lies at the end of video where I'll tell you what I had been doing. Unless you have been living in some mountains or in some remote island, you should be experiencing some incredible volatility and downturn in the stock market. It's important for me to share with everybody who are experiencing the end of the world kind of feeling, what has caused all this huge volatility and what is likely to come. Remember, these are my usual disclaimers. And let's watch on. So this morning, the US stocks fell tremendously. In fact, it fell by 3% on S&P 500 and fell by about 3% in NASDAQ as well. And this was quite frightening compared to many other days where volatility is around, max 1 to 2%. Now, the drop was not as bad as what Japan and Korean stock has experienced. The Korean and Japan stock has experienced some fierce numbers. Nikkei 225 went down by 13%. The topics went up by 12%. Circuit breakers were kicked in that stopped trading. And interestingly, today the stock market has rebounded as well. Now, it's important for us to note that over the weekend and on Monday, there was a lot of bad news, right? A lot of bad news. And let's take a look at what these bad news are. First of all, last Friday, the US market crashed quite a bit. And there were a lot of fears that US is heading for recession when the unemployment rate seems to have creeped up. This is a situation right now that bad news is no longer good news, but bad news is bad news. So the US unemployment rate coming down certainly has frightened the hell out of people. And as a result, the Asian stock crashed tremendously. We'll talk about Japan in a short while, and Japan is the unique one. And Warren Buffett is taking the opportunity to sell off a lot of stocks as well. Bitcoin and other cryptocurrency is also tanking tremendously. So it's all big bad news, right? And I remember there's also threat of war escalating between Israel and Iran. So all this collectively comes together in a very, very bad time. So the stock market tanked in Japan, in Korea, massively, okay, on Monday, massively. So on August the 5th, Monday, Nikkei crashed 13%. And circuit breakers were kicked in. South Korea also hit circuit breaker. And these are frightening situation. And that spill over to the US stock market as well when the market opened. At this juncture, it's important for me to explain to many people ask me, Mr. Loo, why did the Japan stock market tank? Well, it's because of what we call the yen carry trade. It's being unwinded. And that caused the entire US Japan stock market to crash. Well, what the hell is that? Let's watch on. So what is the yen carry trade? Well, this is a unique situation that came about because of interest rate disparity. Well, when things were going well over the last few years, many people borrowed money in yen to buy US-based assets. That was because Bank of Japan kept the interest rate very low in Japan, and that causes a huge disparity with the US interest rate, where it's as high as 5.5% to 5.5%. So the disparity interest rate gives rise to certain arbitrage opportunity. So let's watch on this illustration. Person A borrows yen that is worth $100. So what does he do? Person A exchanges yen for US dollars and buy US dollar $100 worth of US stock. So right now, person A owns US stock worth $100 and he owes $100 worth of yen. And when things were going well, the Japanese yen was depreciating against the US dollar. And the US stock also appreciated, as we can see, some massive bull run. So he made money on two fronts, right? He now owns US stock that's worth maybe, let's say, 102. He appreciated by 2%. And he owes yen that is now depreciated 1%. So it's good, right? He makes $3 out of $100. That's a great news. Eventually, he sells his US stock and exchange dollar back to yen, and now profited $2 from the stock gains and profited $1 from the yen depreciation. Very, very good business. A lot of people do that. So think of this in a massive, massive amount. So this has been going on for some time. As long as the interest rate disparity exists between Japan, which is low interest rate, and US as high interest rate. Two things happen that make this trade unprofitable anymore. Number one, Bank of Japan increased their interest rate. And why did the Bank of Japan increase their interest rate? Is because the underlying inflation start picking up. So when the interest rate increase in Japan, the yen increases. So now the yen appreciates against the dollar. This thing about borrowing cheap yen and invest in US, this first part is gone. The second thing that happened is that the US stock market started crashing. A lot of money that we have made from US asset start vaporizing. So right now, they lose money on an appreciating dollar versus yen. So therefore, right now, suddenly they got caught on both sides. So let's look at the example, what happens right now. People are now paying back yen that they borrow before it appreciates further because they are started to realize they are in deep shit, you know. So what happens? So let's go back to the person who borrowed yen that is worth 100 US dollar. He exchanged the yen for US dollars and buys US stocks worth $100. That was before, right? So everything is okay. He owes 100 US dollars worth of yen, but he owns 100 US dollars of stock. But things are not going well right now. The Japanese yen appreciates against the US dollar. So let's say appreciate 1%. And then the US stock depreciate by 2%. It was far worse yesterday night, right? So right now, what does he has? With $100 that initially put up, now his US stock is worth 98. And his yen, he owes a debt for yen that is worth 101. So he now loses $2 from stock and $1 from yen appreciation. Think of this in a massive scale and think of this when people use leverage. They borrow money, they leverage amount, they use margin trading in a massive way. The money that they lose are in the phenomenal billions or trillions. And that's a frightening thing right now. There were margin calls and people actually started unloading a lot of their US position. And that caused the fierce depreciation that we see. Well, the good thing is that right now, I look at the futures market, you know, it's right now rebounding already, okay? So it's not so bad right now. But, you know, yesterday night was a frightening number. So, Mr. Loo, so what's going to happen in future, right? You know, this thing. Well, I think there are three scenarios we should paint. Number one, US banks are involved in this trade, meaning that they actually were the participant of borrowing from Japanese yen and buying US asset, and they kena caught in the process and lose a lot of money. Then this could lead to a broader financial crisis like what happened in 2008. In 2008, there was a massive S&P 500 fall of 50%, 50%, frightening. And then we will have Armageddon, right? This is the time where Mr. Loo will really, you know, panic and sell as well. Now, barring a big financial crisis like that, now the question really is, will this kind of thing happen in this scenario? Well, I think it's very unlikely because the US bank this time are very well capitalized. And the Federal Reserve have done checks on them and came out the report, the banking system remains sound and resilient with risk-based capital ratio well above the regulatory requirement. Basically, the Financial Stability Report of April 2024 actually came out and said that the banks are in a safe position. As long as there's no run on the bank, there's no run on financial institution, I think the 2008 financial crisis type of scenario will not happen. So I don't think it will happen, you know, doesn't mean it will not happen, but I don't think it will happen. I think the chance is very unlikely. A lot of people will share my thought that the 2008 financial crisis will not happen. But certainly yesterday, Monday, felt like a 1987 Black Monday. 1987 Black Monday was a terrible combination of an overvalued stock market, like what we're experiencing right now, inflationary fears, like what we're experiencing right now, algo trading, margin trading, and things like that. So that's 1987, and in some form and shape, it does look like yesterday. In fact, this is written in the media. Japanese stock died 4,000 points more than Black Monday in 1987. So the question really is this like Black Monday? You know, is this going to be another frightening crash? Black Monday, the crash actually took, I think, close to 1 to 2 years to recover. Well, we think it's unlikely. Number one, most of the US stock are still at or below par value, and only those AI stocks can be considered overvalued-ish. Okay, so I don't think it's across the board that is overvalued. Number two is that in 1987, they have no circuit breakers. So because of margin trading, algo trading, they started then, it was sell, it's just massive crashing. Now in the stock market, they introduced circuit breakers. If the stock market hit below a certain level, you stop trading for a while, let everybody cool down, you know, stabilize, and we go again. So we don't think that this is likely to happen again. The third scenario is that, what we are seeing right now is what I call a significant retracement, similar to what happened between 1995 to 2001. So I shared with you this before, I'll share again. Between 1995 to 2001, .com bull run, there were massive retracement, right? Anything between 4%, 10%, 6%, 10%, 7%, 13%, 7%, 22%, 5%, 13%. Look at the whole graph. It's actually going up by a total of 250%. But in between, there's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 significant retracement, up to 22%. I am in the opinion that this is most likely what's happening, and I don't think that there's a cause for major concern, because I still believe that we are right now in a major multi-year bull run that is similar to the .com. Now we're just doing an AI bull run. The similar thing also happened to Nasdaq. Nasdaq has fell tremendously. But you look at the Nasdaq retracement over 1995 to year 2000, it went down by 10, 15, 10, 15, 5, 8, 8, 8, 5, 18, 30%, 14, 13, 15. It's very common to have Nasdaq falling by 15% to 20% kind of level. So I don't think that we need to over-frighten ourselves as well. Take note, this bull run went up by 11 times. 11 times with a lot of frightening retracement. And I would like to say again, if you cannot take retracement fears, if you know that now you are panicky and unable to take this kind of volatility, don't invest. Put your money into fixed deposit, put your money into T-bills, put your money into CPF, okay? Don't touch stocks at all. Stocks will give you this kind of volatility. Now, I think the bigger fear that we should all be concerned, which very few people raised it, but I think is the bigger concern, is that Middle East war is about to break off. Now, will it for sure break off? I don't know. So the backdrop to this is that the Hamas leader was in Iran to attend the inauguration of the country's leader, and he was being assassinated, allegedly by Mossad, which is the Israeli secret service. And right now, the Iranians are crying out for murder and retaliation. And a lot of the global countries are telling their nationals to pull out of Iran and Lebanon. And there is a lot of fears that this thing will escalate into a full-fledged Middle East war. Israel is ready for war and even threatened to do preemptive strike. And US is trying to tell everybody, please, 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 cool down, cool down, cool down. So the Middle East situation is escalating. I think this is a bigger threat than what we are seeing in the Japan carry trade incident. And if this were to happen, I think this impact will be far worse, because the oil prices will escalate and global uncertainty will escalate as well. Another threat that is facing us right now is that with the confirmation that interest rates are likely to rise in US, the US dollar is now depreciating against the Sing dollar and likely to depreciate some more. So this is something that will hit all your portfolio value, because most of your portfolio value is denominated in US dollar. This is something that we know all the while. I've said it several times. It's now happening, so you should not be shocked. But when it now hits, we all need to be cognizant that now it's here. Interestingly, the ringgit is strengthening significantly against the Singapore dollar. Significantly. The good old days of $3.50 plus cents of the Sing dollar against the ringgit is over. But we're happy for our Malaysian counterpart as well. Your country cost of living will now be eased off with the increase in ringgit. I'm happy that I really bought my house. Well, I really got a lot of note from people and just said, how, Mr. Loo, I want to buy a Malaysia house like you, Well, pay more. You don't have a choice right now. Pay more. I just want to say categorically that the worst may or may not be over. Today, I think the market is most likely going to have a rebound. Does it mean that the worst is over and, the stock market will now stop falling and only have rises? It's hard to say. I don't think so. I think there's continued to be a lot of volatility. I said it again and again and again, volatility is going to increase, and we exactly see right now. And if you see those retracement that we'll talk about, we're going to likely to see them continuously as the market continues. So Mr. Loo, you talk so much. So what are we supposed to do, right? Should we buy or sell or whatever, right? Please tell me. Well, Mr. Loo cannot tell you what you should do, but let me tell you what I was doing, okay, and likely to continue doing. So while everybody was getting panicky with the stock market yesterday, I was carrying on my life. I had a birthday celebration with my son and my family, and it was my son's 21st birthday. I obviously could not care less about the stock market. Okay, could not care less. I was after that because we ate so much things. I was clocking steps, exercising. I was doing some skincare preparation. I'm going to Korea. Hopefully, they will. I'm contacting skincare doctors. Hopefully, they can laser off this part. There is a sunspot. I'm also working on the 88 double sale, double digit 88 sales on that's going to happen on the 8th of August. My company is doing a big sale event. Huge vouchers are coming out, so we'll capitalize on it. I'm doing some strategic planning for my companies, and also, by the way, I'm also quietly computing what my dry powder position is. In case the stock market really goes down significantly, I can fire some more shots. So as you can see, I spend very little time looking at stock market. And this is where I want to advise everybody, right? If you have a position that is strong enough, your safety net is really built, and then you've taken positions that in the long run will rebound and continue to compound, I don't think you need to be too concerned. I'm not concerned. I'm just going to tell you that, I'm going to live my life. I'm not going to sell. I'm just going to take a peek at the corner of my eye. If not for this video that I have to do to calm everybody's nerves down, I don't even want to do about it. This is what I advise everybody, stay calm. There's no need to panic. A lot of y'all wrote to me asking me, it's the end of world here, right? In my Telegram group, there's a lot of panicky people that I simply tell them, calm, chill. There's nothing to worry about. So in conclusion, I'm not selling in this time of panic. Yes, there's a lot of panic. There's a lot of fear. And I also agree that the market could continue to decline and could decline significantly. But just as what we've seen over the last 100 years, the S&P 500 and the NASDAQ will eventually rebound. It may take time for it to rebound, a long time if even possible, but this is something that I'm prepared, The question is, are you? Now, if you're not prepared to take volatility, and now is a good chance to know about yourself, when the market is retraced by 10, 15%, if you cannot take this volatility, then my best advice is don't touch stock market. Okay, don't touch. Okay, don't touch. So thank you for watching. Okay, always remember to give a like and hit subscribe, and I'll see you in a day or two. Bye-bye.